if you're not successful with trading and you keep losing all your hard-earned money, this video will reveal how to become a profitable six-figure trader from scratch. I'm here to show you the exact strategies that helped me achieve consistent profits, and now you can do the same. The only thing that I ask of you is to give me your complete attention, because if you don't have the patience and the focus to watch this video, how are you going to become profitable at trading? I want you to watch our video from 2018 so that you can understand how much life can change.
It's all about hard work, dog.
Yeah, man.
Believe it or
Hard
not.
work, dedication.
Yeah, we know one day, when we're talking about a different story.
Want to leave this world.
Yeah, keep working hard, keep pushing. Let's get it.
So what you're going to learn in this strategy breakdown is 3 powerful sections. Part 1 will be about how to analyze and pick the most profitable assets to trade. Part 2 will be about the exact strategies that I use to generate consistent profits. And part 3, which is the most hardest, will be about mastering the psychology of trading and thinking like a professional trader. I believe our reputation and success is built on how transparent we are ever since we started this YouTube channel. We've always shown live trades, live profits, but we don't only just show you the wins, we also show you the losses, because that is the reality of trading. We've been trading for many years, and you can even sort out our videos by checking the oldest videos on this YouTube channel so that you can see that we've been working on our craft for many years.
A fucking goat outside.
It's just a goat.
No, it's a fucking goat.
What's up, guys? Welcome back once again. In this video, I'm gonna teach you guys the best trading strategy: swing trading. Swing trading is basically the best way of trading. You're gonna be trading stress-free. You can trade while you're a student, and you can also trade while you're also still employed or working a 9 to 5. And this is because you don't need to be on your phone 24/7, pressing your phone, looking for trades, having to look at the market every single day, and not having time to fulfill your duties. That is actually called scalp trading. So those of you guys who are interested in scalp trading, there's a video over here whereby we do scalp trading. And if you're looking for something like that, be sure to be on the lookout. We're going to be dropping a video about that soon. But in this video, I want to be teaching you guys about swing trading. I only took 3 trades and we killed the markets. 1 trade was a loss, but I only won 2 trades and literally killed this account. So what you're going to learn in this video is price action and price behavior. You're also going to learn basic technical analysis, understanding chart time frames, how to manage your risk, entry techniques, and trading psychology. Basically everything. You will leave this video knowing on how to be a consistently profitable trader. Like this account that I'm telling you guys about, you can see we took this account from $251, that was the deposit, and I took out $40 from this account because I wanted to trade a small account to just test out this strategy. And we took our first trade that ended up being a loss, but we also have 2 running trades that you guys are seeing over here that are currently in profit. This is a trade you can see on the screen. We have killed Euro AUD. We literally swinging this trade. This other trades were scalp trading, and that's not what we're going to discuss today. In today's video, we're going to be discussing swing trading, literally killing 1 trade and maximizing your profits. The other trade that we took was USD CAD. Waited for the trade, took 1 trade, maximized another trade, and just killed with 1 setup, 1 trade, maximize my profits. That is what you're gonna learn. And lastly, we also took a loss, and this is the last trade I'm gonna cover in this video, how to avoid this loss, because I'm also going to talk about liquidity. Not forgetting that, because liquidity is also very important. The moment you understand liquidity, guys, that is when you're gonna be increasing your profitability from where you are. Most of you guys who've been trading for quite some time now, you're probably stuck with how to be profitable and how to improve your trading psychology. And trading psychology also includes understanding your emotions, understanding who you are, but also you need to understand concepts such as liquidity. And this is why this video is very important for you guys. So make sure you watch this video up until the end. If you're new to the channel, make sure to click that like button, subscribe, and share the video with your friends. And it will mean a lot for me because I'm doing all of this for you guys completely for free. Let's go. So first things first, guys, what I'm gonna teach you is how to analyze. This is where I took my entry over here, and this is how much I was willing to lose, and this is how much I actually won. So I was risking 0.29%, and I was able to make 2% profits. And remember guys, this is a lot of money if you're using swing trading. I want to break down everything you need to know in order for you guys to catch a trade like this. Let me analyze this pair again all the way from scratch. The charts are clear. Now let me break down how we catch trades like this and how to analyze the market. First things first, what you need to do is you need to go to daily chart. You can go to the weekly chart. These are higher time frames, guys. Higher time frames help us understand what is happening with the overall market. Then from the higher time frame, we have the weekly chart and we also have the daily chart. I'm just gonna stick with the daily chart for the purpose of this video. We'll only use it to analyze what is happening with the overall market. But once we dive in deeper, that is where we're gonna be looking for our entries. So if you're analyzing on a daily time frame, weekly time frame, 4-hour time frame, you're just checking what is happening in the overall markets. But the moment you go to the 1-hour time frame, 30 minutes time frame, 15 minutes, and also even 5 minutes time frames, that is where you're looking for your entry points. And that is why I also have entry techniques or entry strategies that I'm going to be sharing with you guys in this particular video. So it's going to be a very exciting one and you're going to learn a lot. Let's go. You can see already from a daily time frame, when we analyze this chart, your AUD, we can see that what we need to do is we need to highlight our highs and our lows. I can see over here, this is my low on the market over here, and this is my high. So we can see that the market is actually trapped in this area. Another thing that you guys can do as well is you can change from candlesticks to line charts. Line charts can also help you see the markets a bit more clearer if you're not already familiar with the market. So I can see this also another line I can put here. Remember guys, there's no limit in terms of how many lines I can put. I just need to put my lines where I'm seeing that the market is reversing. For example, if I come over here, I can see that the market has reversed over here, it has reversed over here, and it has reversed over here. So it has reversed at levels that I'm seeing that we are on a floor. The market is not able to cross below that structure. That is where I'm going to put my lines. At the top here, we are at a ceiling. The market is not able to cross above that structure. Hence, that is my ceiling. And I also did that on a higher time frame using candlesticks. So now let's go back to candlesticks again so that you guys are able to follow what I'm saying. So in the candlesticks, you can see these are the candlesticks that I'm seeing. So the market is not really reversing at the particular line. So if it's not at a particular line, we can use what we call a zone. Just this rectangular thingy, I can put it here and this is my zone. So I know in this zone, the market is not able to cross below. And at the top, I also have another zone over here. So the market has been inside these zones that you guys are seeing over here. This is what we're seeing on the daily time frame, guys. We don't have a specific trend. I'm also going to teach you guys how to spot trends, but with this particular pair, there is no specific trend. The market is just playing around. That is why when I went to my line charts, I can see that the market is just trapped in here. There is no particular trend. I'll teach you guys what are trends and how to draw them. From here, I'm going towards the 4-hour time frame. Once I come towards the 4-hour time frame, I need to know where I'm going to look for my entries. So before we even go there, guys, I'm just gonna replay to before where we took the entries and show you how we analyzed the market and prepared for our entries. So first things first, what I need to do now, I need to highlight areas whereby I'm seeing that the market is giving me sensitivity. I need to find weaknesses in the market. What I need to do is I need to come to where the market is. Because I'm looking for an entry here, I need to see what's happening. I'm gonna take a touch here and I want to have the market touch over here, and I just pushed it all the way towards the upside. You can see over here, this is my trend line, guys. I'm seeing there's a trend line over here. So I'm gonna go ahead and double that and I'm going to put it here. So already by coming at this particular moment, I can already see that the market was coming from a bearish trend and we're in a possibility of a bullish trend. Not only that, we also have some sort of a support structure here. I showed you guys what is support. This is more of a floor, right? I see that we have a floor over here. I'm also going to break it down as well to help you guys understand why I'm putting my lines where I'm putting them. So I just wanted to start with the charts first. That way it's easier for you guys to follow when I explain it with simple lines. So right now we can see that the market has been playing around like so. The market has given us a bearish trend. It's been pushing up and down, and it broke outside the bearish trend, gave us a retest. Now we expect a push all the way towards the upside. This is called a breakout retest. But as simple as it looks, a lot of people are losing money with this simply because they don't know how it works, and also they don't understand liquidity. And that is what I'm also going to teach you guys, so that you can be able to capitalize on such movements in the markets. Because if you're able to catch a trade like this and you're able to hold it up until the top, you can literally make a lot of money with just a single trade. One trade, one setup, one trading session can literally change your life. And this is what you're going to be learning in this video. So over here, you can see this is what happened. If I come here, guys, we can see that over here we had a high. And if I put it down again, over here we had a lower high. It's still a high, but it's lower than the previous high. And over here again, we had another lower high over here. You can see that, right? So with this, we are having a bearish trend. So if I understand that I had lower highs and lower highs, I can go ahead and edit that and also have it as a lower high. And lastly, at the bottom over here, we had a lower low, right? It can be, we had a, over here, we had a low, right? And next up, we had a lower low. Why we call this a lower low? Because this low is lower than the previous low. And I came back again, we have another lower low, because this low is lower than the previous low. So since I know that I have a lot of lower lows, this is a bearish trend, so I can go ahead and edit that and have that as a lower low as well. So these are the characteristics of a bearish trend. Now, how do I identify that the bearish trend has changed momentum and is giving me a different type and is changing into a different push, into a different trend, right? How do I know that the market won't continue with the bearish trend? Because if the market continued with the bearish trend, the market would have continued to sell. But something happened, right? We had what we call a break of structure. The market, instead of the market going towards the upside, giving a low and selling, instead the market broke outside and created something new. It had a change of structure, right? The change of structure here is a higher high. I'm going to go ahead and basically highlight that with a different color. I'm going to use here, let me just say I'm using blue, right? I'm going to use a blue color over here so you can see something different is happening. We had a higher high, right? At a higher high, guys, this is a change of structure. The market is no longer giving me lower lows, and it's no longer giving me lower lows and lower highs. It is giving me a higher high, because now this high is higher than the previous lower high. It's no longer a lower high, it's a higher high, because over here we're supposed to have a lower high if the market sold, went up, lower high, sold, went up, lower high. That's the continuation. But now we had a change of structure. So once the market came out over here, this is where a lot of people actually get it wrong. Once the market breaks outside and gives us a new high, which is a higher high, showing that there is a change of market structure, you know what a lot of people do? A lot of people just go ahead and enter a lot of trades. Yo guys, the market is out of the bearish trend. The market is now buying. We're no longer bearish. We're no longer selling. We are now buying. The entire buy immediately. You know what happens? They lose. They'll go ahead and enter buy over here, looking for the market to continue buying, and it will reverse and take them out, making a loss. And that is because they're forgetting the basic concept of price action. The basic concept of price action is you buy low and you sell high. Because this is a higher high, we are not buying now. It's still a high. We need to wait for a low. So what we need to do is we need to wait for the market to go back towards the downside and create a low, and that is where we're going to be expecting the market to reverse. But now I want to teach you guys something. Because we are expecting a low, this low will now become a higher low, because this was a lower low. Now this low is higher than the previous lower low, so we're looking for a higher low. So with the higher low, we're going to look for the next higher low, and obviously over here we're going to look for a next higher high, so on and so forth, right? Let me just remove this. So about that, we have changed our trend. The trend now is going to be something like this. We are now bullish. Let me just edit it. We're having higher highs and higher lows. We are now bullish. We're looking for buys. We're no longer bearish. We're not having characteristics of a bearish trend. So now let me remove all of this so that you guys are able to follow. So now with all that I just taught you guys right now, understanding change of structure, somebody will still get a low over here and they will enter a buy at this particular area, and the market will still take them out, because we are talking about swing trades now. You'll enter a buy expecting the market to push all the way towards the upside, but the market will take you out because you're looking at what? You're looking at your previous low. You're saying, okay, we've broken outside over here. This is the previous low over here. So I'm gonna put my stop loss over here. Putting your stop loss over here, the market takes you out par and it continues going up. How many times has this happened to you guys, right? Takes you out and it continues buying. Let me know in the comment section if this has ever happened to you. I'm gonna teach you how to avoid that by understanding liquidity and price action. So now before you go any further, let me teach you guys exactly what I mean. First things first, I just taught you guys trends. First of all, guys, we have what we call a bearish trend. The market is going down, having a bearish trend. And another thing that we have over here is a consolidation, what I just analyzed on a higher time frame with Euro AUD. There's no up, there's no down. The market is just consolidating. The market is trapped. And lastly, we have a bullish trend. The market is going up and down, but overall is going up, which is a bullish trend. So now let me teach you guys how to spot a change of trend. So since this is a bearish trend, we've already talked about the characteristics. We're having lower lows and lower highs, right? You can see over here we have lower lows, and at the top we have simple price action, guys. You can see lower highs and lower lows, and over here we have higher highs and higher lows. So this trend is bullish. This trend is going up. We call it a bullish trend. You can see. So with the bearish trend, guys, in order for us to look for a different movement, we can see that with this trend the market has been playing around like so. I'm this side, right? I'm this side. So basically we're having lower highs and lower lows. The moment the market is able to break above this structure, it can create something new, which is a higher high. We can expect the market to hit here and reverse. And once the market does this, we're having what we call a change of structure. I've taught you guys already what is a change of structure. I'm going to use a different color. Higher high. This is a change of structure. With higher high, we are now going to we're expecting the market to change from a bearish trend to a bullish trend, right? We're expecting the next higher high. What do you expect out of that? Expect the market to push below, continue pushing up. We're going to be buying at the lows. We buy low, we sell high, but overall we hold the buy because we're in a bullish trend, right? In a bullish trend, we're looking for an opportunity to enter a buy. I'm going to teach you guys how liquidity works. Stay with me, stay with me, stay with me, guys. Lastly, over here, you can see, guys, we have a consolidation. I don't need to explain this a lot. I think this is easy to understand. Over here, we have a high, and over here, we have our low, right? In fact, I made a mistake here. This is simple, right? Over here, we have our highs. The market is not breaking outside. It's not higher highs or higher lows. We're just having highs and lows. The market is stuck. And the opposite is also true, right? Let me just make sure that you guys are also able to follow. So over here, the market was giving us higher highs and higher lows, and it came back and gave us what we call lower low. So we had a change of structure. So if you're going to be doing swing trading, this is what you're looking for. The moment the market breaks outside, we now know that we're no longer in a bullish trend. We're no longer in the buy, so looking for sells, but we don't buy immediately. We don't sell immediately. This is a low. It's a lower low. We don't sell low. We buy low. We sell high. So the opposite is also true. We're looking for a sell at the top. Now we're looking for a lower high. So for a sell, we need to sell high, right? We're looking for a lower high. So the continuation is like that. This is number one. I just taught you guys. Now you already know a change of trend. This is what you're going to be looking for. This is the strategy. Now I want to teach you guys something, right? Because the market makers, of which these are the people who are doing liquidity, the market makers are the big banks. We are retail traders. We are the small fish. Basically, when it comes to Forex trading, guys, whenever you enter a sell, there's somebody entering a buy. Whenever you win, there's always somebody losing. But we are a small fish. There's also big banks that are collecting all our money as a small fish. So some of you guys will be wondering, why is the market always taking me out? Why is the market making me lose before it wins? Because they're taking out liquidity. That is what it means. It's called stop loss hunts. The market is hunting for your stops because they know where you have your stop loss areas. I've already showed you guys what is a stop loss. It's basically saying the market is now at a low, testing the last resistance, of which is going to be a new support. So you are saying that you are going to enter a buy over here. You want to enter a buy over here, and you want to swing like I just swung that trade over there. You know what happens? The market will continue pushing towards the downside, doop, takes you out, and continues pushing towards the upside. We call that a liquidity grab. The market grabbed you with liquidity. Now, what you need to learn about liquidity, when it comes to liquidity, guys, you don't need to rush to enter a trade. Let's say we're having what we call a double top. A lot of people have double tops and expect to sell immediately. Nope. After having a double top, you need to wait for the market to take out liquidity and then you sell. I'm also going to show you guys in the real markets, right? So usually the market will make more like a double top like this. You don't sell immediately. You wait for the market to take out liquidity, and this is where you enter. I'll show you guys how to find liquidity. You don't enter your sales over here. A lot of people will enter their sales over here and they get taken out by the market, right? They get taken out, literally stop loss hunt out, but we are looking for a sell over here. This is a perfect strategy, guys, that we are also learning, especially for a challenge that we are running right now. We're running a few $2 to 50K challenge. So this is a strategy that we're seeing that we have the same methodology. We're literally seeing the same thing, but somebody ended up in a loss while the other person ended up in a win because of understanding liquidity. The market, after doing these setups, will take you out and then sell. And the opposite is also true, right? With the buy, the same thing will also happen. The market can come and give you a double top, and you feel like it's time to buy, it takes you out, and then it buys after. So we just need to wait for liquidity. You need to wait for the market to take people out. While they were rushing to take their buys, they took their buys out. The market took them out. They were ready, they were happy, like, yo, I'm buying. Now the market comes, takes them. They already entered the entry. Now in profits, they're happy. Yeah, I'm winning. It's time to buy my mom a house. It's time for me to quit my job, right? It's time for me to buy a new car. The market reverses, takes you out. Now it's a long story. But with what I'm teaching you guys is wait for liquidity and enter your trade. I'm going to show you guys how we look for this liquidity in the real market, right? Where people are not waiting to buy. I want to teach you guys how to wait for the banks to take out people before you take your entry. Now let's take it towards the real market. With the real market, how we get liquidity, guys, you're going to see with a spike like this. This spike came to test the lower lows. So with this spike, a lot of people would have entered a buy here already. We had a breakout retest. This is where people take their buys. We're not taking our buys here. And if you feel like you want to take a buy and you missed it, you came back, you're waiting for liquidity, you got the liquidity, you missed the liquidity, you don't know when to enter, you're not on your phone like somebody who's a scalp trader, you can do something that is called a buy stop. You can have an order waiting for you here. Once the market gets to this level, it means that you will just buy. But let me explain to you also how that works. You need to look at our previous video where we're explaining supply and demand. Once the market gives me a lot of red movements like this, let's say these charts were red, I'm going to change them the colors afterwards. Right, this here, it started with a red color. Red means sells. The market is going down. That's a red color. The market was selling. When the market was selling, and by the way, these are candlesticks, guys. The market was selling, and we're having a strong candlestick close towards the upside. We're having another strong candlestick close towards the upside. This is a perfect time for me to enter a buy after a retest or after liquidity is done. I'm going to take my entry over here if I am late. It's either take your entry over here after liquidity is done when you get this confirmation, or if you wait for liquidity, you can also take the entry at the bottom over here. Either you can take an entry over here, or you can also take an entry over here once the market is able to break with this setup. So I give you guys two entry techniques. This entry technique is fast, is quickly, but if you miss it, there's still also another opportunity that you need to wait for this particular setup over here. This is a bullish setup. So let's see what happens with the market. I want to take this entry, but I missed it. Now let's see what happens if I get another confirmation like the one that I just showed you here. But you see, guys, you see that? You see that? This is where we took the next entry. So let me delete this and dive in deeper so we can see that happening. I told you guys what, in terms of entries, we don't use the 4 hour time frame. We use the 1 hour, 30 minutes and 5 minutes time frame. So for the 1 hour time frame, we can see what happens to the candlestick. We had a lot of sales, 1, 2, 3 strong, we buy. Wait for liquidity to take people out. Then we just come there, take our entry and we swing it, because we already understood we were coming from that particular trend, right? Now expecting a bullish trend, and from a bullish trend we were looking for a swing opportunity, and that is how we took this entry, guys. I hope I didn't lose some of you guys, and I hope some of you guys actually learned from this, but that's exactly what happened. That's how we took that trade over there. Let me just bring it back as well. You can see what happened, right? The market was coming with sells, now having 1, 2, another big one, third one, we're making profit. That's exactly what happened when we're trading with this trade. That's how we caught it. So I hope you guys learned a thing or two about liquidity and having to wait for liquidity, and it also happened to us. Let me just go towards Euro GBP before we finish with the last winning trade. Let me talk about the trade that we lost. With the trade that we lost, guys, we have something that is called liquidity grabs, whereby the market will take you out with the strong liquidity. I'm talking about this because the first trade that we took for this particular account, it taught us to be careful about liquidity. That is why I'm talking about it, because the first trade that we took, we literally got taken out by liquidity. The market was giving us what? It was giving us a bearish trend, literally lower lows and lower highs. The market broke outside, so I retest. I wanted to take a buy, just like the majority of people. Took my buy over here, the market went up and shoot. After it takes me out, what does it do? It buys. And this is what happens to a lot of people. It happened to me as well, but I also spoke about managing risk. We manage our risk, guys. You always lose small and win big. When it comes to trading, 4 things must happen, right? You can win small, you can lose small. You can see over here I lost small. You can also win big, and those are trades I'm holding. You can win big, and you can also have what we call a break even. A break even is when you took a trade, went in profits, you wanted to hit the top over there, but you held it and it came back and take you out at your particular entry. You exited at the entry point. You don't let it to go to losses. We call this a break even. Whenever a trade goes to profit, you need to protect your profit by securing your trades. You move a stop loss above entry. You literally move your stop loss over here where you're willing to go out. You go out where you entered. As long as if your trade goes to profits, guys, it must never take you out in a loss. That is a break even. So one thing that must never happen to you guys is a big loss. Never have a loss this big. I want to tell you guys about something. There's also something called demand and supply. I want to teach you guys about a buy zone. I've told you guys a lot. I hope you guys are not losing me. I told you guys in this video, I'm sharing with you guys all the techniques that you need in order for you guys to be profitable. So if you're already liking what I'm sharing, please leave a like and comment in the comment section below. Let me know if you find this useful. Let's continue. Demand. So with a demand, let's say the market is playing around like so. Like I told you guys, lower highs and lower lows. We're having a new change of structure, and the market continues buying. The market gave us opportunity to also buy again. Once the market did all of that, when it comes back to that area, guys, we can also expect a new buy. We call this area here a demand zone. A demand zone. This is where the market bought the last time. It came back, it started the movement from here. We're expecting the market to buy again from this area. It's a buy zone, and the opposite is also true. I can also draw it for you guys. I'm also going to make an example of a supply zone. So with the supply zone, the market was first bullish. Once the market was bullish, it came back, created a new change of structure coming from higher highs and made a lower low. And from there, the market sold, respected the trend. The moment it goes back up to that particular area there, we're expecting the market to sell again, because that is a supply zone. So it's literally the same thing that happened over there, guys, just the opposite. We call this a supply zone. Supply zone can also help you if you want to understand liquidity. So you know that once we sold here, you can come back and look for another selling opportunity. That's what I just taught you. So now let's talk about how we ended up looking for the entry on this particular trade. Let me go to a complete different pair and analyze it for you guys. When we analyze, guys, we start from a higher time frame to see exactly what the market has been doing, because the higher time frames help us understand what is happening with the overall market. So for higher time frame, I can see that from the daily chart that the market was in some sort of a consolidation. This was more or less the high, and this was more or less the low. This was the low and this was the high. That's also looking for buys, looking for opportunity to swing. This is what we mean when talking about swing trades. You're looking for the overall low, looking for a high. At a high, you can enter a sell over here. This is why swing trading is powerful. If you're a busy man, just wait for opportunity to enter a sell and literally hold it for long. The reason I'm using a higher time frame like a swing trade, because we're looking for swing trades. Like this sell can be a long sell and this buy can be a long buy. That is why for swing trading, it's important to analyze on a higher time frame in order for you to catch those swing trades. So you can see, guys, this is what happened, right? So now let's talk about the entry. How did you end up looking for the entry? I was seeing that this is also another reversal level. This was our demand zone. You understand? I told you guys about demand, right? This is where we bought before having those strong lows. This is the demand zone over here. So let me take it towards the 4-hour time frame and just refresh. Now we're back again, right? So we were seeing this area over here as a demand zone. So with the demand zone, we're looking for the market to buy when it gets here, because it's a demand zone. I taught you guys demand zone not so long ago. When you see a demand zone, expecting buys. When you see a demand zone, expecting buys. But the moment the market breaks below a demand zone, it can now become a sell, right? It's possible that the market was either testing liquidity or is looking for sells. But over here, there's a crazy liquidity that happened over here, guys, and that's what took me out. It doesn't happen all the time. It's manipulations could have been used, but as long as you know how to manage risk, this won't take you out. So we already know demand zones, guys. You're looking for buys at the demand zones, but overall, once we get the opportunity again, whereby the market crosses above this area, comes back, give us a retest, waiting for a weak creation. After liquidity, we take an entry, 1, 2, in. Literally already from this, the entry techniques I told you guys, you already got 2 wins. You understand the demand zone, you already know the demand zone, you already know about liquidity. You took your 2 trades and you won. After winning your 2 trades, just say thank you, GOAT. Thank you, GOAT. You taught me how to trade. A lot of people didn't believe in Forex, but you taught me Forex. Thank you, GOAT. I appreciate it, and I also appreciate you if you're able to do that, because that's the only thing I need just to change your life and show you the power of Forex trading. And this is it, guys. This is how it looks like. We're done with this pair. Now let's look at the last pair, guys. I hope this video is not going to be too long and you guys are able to follow. So for this pair, to save time, you can see, guys, already for this pair from the daily time frame, looking at the market from the overall perspective, you can see the market previously was coming from a consolidation structure with a demand zone over here. The market was sort of trapped in here, and we're able to break above and continue buying, because the moment the market came here, broke outside, it gave us a demand zone here. Tell me, guys, demand zones don't work, because literally over here, the market bought here and had to come back and test this area here. Tell me, guys, this demand zone is not working. A lot of people don't trust price action. There's price action, bro. Literally putting price action together with understanding liquidity. And lastly, I didn't even go deeper with demand and supply. Demand and supply, I'm going to teach you guys in a whole different video as well. You know, so it's all about which strategy you find useful. So with the demand zone over here, the market now started buying like crazy. And this is how we ended up where we are today. So with the market going crazy like that, we saw that the market was forming a trend. And this is the trend that we're in right now, right? So the market was giving us a trend, right? You can see over here, we're in a bullish trend, up, down, up, down, up, down, up, down, up, down. We haven't broken outside. You know what happens when we break outside, right? We start looking for sells. So long as we're still within the bullish trend, we're looking for buys. So what happened was, over here, the market crossed above this area, crossed above this area here, and it came back, retest, and we took our buy. Let me show you what I mean. Let me show you guys exactly how we looked for that buy over there. We literally came from this structure, consolidation structure, broke outside. The market played around. We broke outside. Immediately after breaking outside, this way people were taking a buy, waiting for liquidity. After liquidity came back, we took a buy, and then we killed. I also took another buy over here as well. After liquidity, took another buy. After liquidity, took a buy, and we killed. So far, guys, this is what I have in this video. If you found it useful, please let me know in the comment section, and also let me know which topics you want me to dive in deeper on as well. For trading psychology, it's literally having the patience to let your trades run. Once you catch a swing trade like this, enter that swing trade, delete your MetaTrader platform, and come check that trade in a couple of days. If it's a loss, it's a loss, and if it's a win, it's going to be a big win. Don't even have a take profit. Let the trade run, bro. Let the trade run. You can even protect it by moving stop loss above entry, but just let the trade run. Thank you, guys, for those of you who reached so far. If it's good, your mentor, signing out.